Welcome to Roundtrip Consult. Today we shall be explaining what an accounting cycle is. Now, an accounting cycle is simply the process or the stages of recording and presenting the financial transaction of a business within a given period of time. Now, this is a step-by-step process which starts from the source documents, first identifying the source documents of the financial transactions that has taken place within the given financial period. Then we move on to the books of primary entry, that is recording the financial transactions which have been identified through the source documents and recording them in journals. They are the books of primary entry. Now, from the books of primary entry, we move on to transferring those recorded items into the principal books of accounts. Afterwards, we proceed to preparing a trial balance, then the financial statements. Now, with the source documents, it encompasses the invoices, the receipts, purchase orders that validates the financial transactions that have taken place within the given time period. Okay, so for instance, if a company makes purchases, they are going to receive invoices from the salesperson. Now, that is an evidence that a purchase was made within that financial period. And so it validates recording those transactions in the books of accounts. Now, after we have identified these, we then record them in the books of primary entry, which we call the journals. Now, the sales transactions are recorded in the sales journal. The purchases transactions are recorded in the purchases journal. Cash and bank transactions are also recorded in the cash books. Now, sales and purchases that were returned due to either defects or failure to meet required standards are recorded in the sales return journal and the purchases return journals respectively. Now, these journals are also known as e-books. Now, after we have recorded the transactions in the journals, we have to transfer them into the books of the principal books of accounts. That is transferring the journal items into ledgers. So we transfer our transactions into the general ledger, the sales ledger, the purchases ledger, or the cash book, depending on the classification of the financial transaction. Okay, now we have covered the first three stages. Now, moving on to the fourth stage, which is the preparation of the trial balance. What happens is that we record all these financial transactions into either a debit side or credit side. Now, at the end of the financial period, all the debit transactions must equal the credit transactions. So the credit side of the trial balance must be equal to the debit side of the trial balance. This takes us back to our accounting equation. Okay, that is the golden rule. For every credit entry, there should be a corresponding debit entry, and for every debit entry, there should also be a corresponding credit entry. And so when we prepare our trial balance, there has to be a balance between the debit side and the credit side. Now, after the trial balance has been prepared in the accounting cycle, the accountants would proceed to prepare the financial statements. And the financial statements include the income statement, which is also known as the trading profit and loss account, the balance sheet, which is also known as the statement of financial position, the statement of cash flow, the statement of changes in equity, and the notes to the financial statements. Now, all these 5 financial statements are based on records itemized in the trial balance. I hope this video was helpful to you. Thank you for watching, and don't forget to like and subscribe to this channel.